Hey there, it's time again for the 3 big things you need to know. I hope you find this very, very interesting because I certainly did. Pay attention whether you're thinking about buying, refinancing, or you're just curious to know what's going on in the economic field of mortgages and what rates are doing right now. So I went back and I did a little bit of research back to the 1970s. Now, a lot of you weren't even born in the 1970s, but for those of you that were, you'll remember. For those of you that weren't, I think this is going to be a great lesson in history. So think about this. 1970s, okay? Oil prices jumped by 350%. Massive layoffs, soaring inflation. So in the 70s, there was the storm, but interest rates for fixed rate mortgages remained around 7.33%. Okay, so higher than today, but still 7.33%. And although throughout the 70s they remained below 9%, the middle of the decade, throughout the middle of the decade, and in the 1980s, things started to peak. So in March of this year, we saw inflation rose to 7.9%. Now, I don't believe it's 7.9%. I think we're much higher than that because in the inflation rate, they don't consider housing, groceries, or fuel. Well, what are you going to do? Create a family budget with no housing, no groceries, no fuel? That's ridiculous. But when we factor that in, I think inflation rate is much higher right now than 7.9%. But we go back in time again. And while inflation is causing anxiety right now, it's simply not comparable to the extraordinary events 40 years ago. So 1980s, we had the Great Recession. And in the Great Recession, we had the Iran crisis. And interest rates soared to 16.35% in April of 1980. 16.35%. Now, they briefly dropped to a staggering 12.18% in July of that year. Now, the devastating recession in 1981-1982 gripped the nation, and mortgage rates peaked in October 16th of 1981 to 18.53%. Can you imagine? 1 year later, October 1982, inflation had finally fallen to a merciful 15%. Okay, I personally think we're pretty close to 15% right now. Now, you don't hear that on the news, but you're going to hear that from the loan arranger, all right? Now, in 1983, mortgage rates dropped below 13%. And although they briefly breached 14% in 1984, they never again hit 15%. On April the 4th, 1986, mortgage rates briefly returned to single digits. In 1987, the stock market crashed and interest rates rose again. Mortgage rates fell below 9% during the entire 1980s, and the 1990s began with rates around 10%. Now we got the 1990s, the great cooling off period. Despite a brief spike at the tail of 1984, rates stayed below 9% for the entirety of 1990s. Then the 21st century. Cheap money, 21st century, okay? The calamities, bursting of the dot-com bubble, the Great Recession, then comes coronavirus. Each time, already cheap money got even cheaper. In 2000 started with mortgage rates just above 8%. Then in 2021, the recession hit. That spurred economic growth and lowered interest rates once again. By fall of that year, we were at 6.5%, where they remained, despite some peaks and valleys. And in 2008, when the housing crash sunk the global economy, rates plummeted again to below 5%, with the exception of 2 brief flare-ups. In response to the pandemic, rates fell to a historic low below 3%. Borrowers became spoiled, okay, with the cheap money. That's today's rate. And today's rate is running between 4.6 and 5.5%. Not near what it was 40 years ago. So, yes, we were spoiled. It's time to get a reality check, and it's still a great time to buy. Why? Because you're going to experience enormous appreciation values. Your values, and this is number 2, are expected to go up double in the next 4 to 5 years. So don't float your interest rate right now. Lock. If you want to talk to me about extended lock periods, I have lock-in rates that'll lock you up to a year in advance if you're in contract. And then secondly, refinances. If you're considering refinance right now and do it for cash out. Don't just do it to drop PMI unless you're already paying a super high interest rate. Those are the 3 big things you need to know. I hope that was informative, and I look forward to seeing you guys again next week, same time. Have a great day.